This is Brian Resney, president of Resney Wealth Management, bringing you an important update about the economy and the investment markets. We've received a few different emails, a few phone calls here and there, generally speaking, from clients about the election results. Are we concerned about the Democrats have taken over essentially the House? What about the Republicans? What do you think about what our president's doing for the economy, trade tariffs, things of that nature? I will tell you that generally speaking, our president is doing a great job. Tariffs are always a concern, but ultimately, as I've talked before, we need to rein in China. China's been a problem country for many, many decades. This should have been addressed years ago, and this is one of the only presidents that I can remember that is actually going after China and making sure they are in a fair trade environment. These tariffs are going to help. Will they hurt our economy slightly for the short term? Just a little bit. Tariffs, generally speaking, our economy is strong. They're not going to crater our economy. It's not going to push us into any kind of recession. But this volatility we've seen as of late is normal. Again, nobody likes volatility on the short term. Everybody wants things to go straight up. While the economy is actually doing quite well this year, the market's kind of flatter down a little bit. And I often am asked, why does that happen? How come the market doesn't go up? Because the economy is good. Sometimes that happens. Often when you have a year where the economy is good and the market's down slightly or flat, you may have the next year that we could see a big rise in the overall equity-based market, which I assume we may see in 2019. Again, every single year, the markets don't go up. Sometimes they're flat, sometimes they're down a little bit, and then it could be followed up with a year or two of excellent gains. Managing money is a long-term process. Making returns on your portfolio, you need to average those out over 3 to 5 year time frames. Because on that 5 year time frame, 1 year could be down, 1 year could be flat, 3 years could be up, and one of those years could be up substantially, maybe 20 or 30%, giving you an excellent overall total return. One of the areas that I've talked about repeatedly this year is the bond market, which is actually in severe negative territory, especially corporate bonds and longer term dated bonds, government type treasuries. These are areas we've avoided all year, and I continue to explain to every investor, interest rates will slowly move up if the economy stays stable and keeps growing. That's actually healthy. Although I will say, I see the Fed raising rates in 2019 maybe 2 to 3 times. Again, if the economy stays strong. Bonds will not do great, but again, the equity markets can do quite well in that environment. We continue to be mainly in the U.S. marketplace on the equity side because, again, we are the strongest balance sheet, strongest grower, generally speaking, around the world. We like what we see, but that doesn't mean we're not going to make some adjustments to our portfolio from time to time as necessary. Rest assured, if we see cracks in the foundation, we see signs of a recession, which we see none of, we will start to get more defensive in our portfolios. Remember, normal volatility, it's going to happen. This year may end positive by year end. We might actually end up or down a few percentage points by year end. But generally speaking, the economy is growing and we like where we're at and we're going to hold pat. We're going to do what's right for your money. If you have questions about your account, of course, give us a call, schedule a review, talk to me personally or my staff. And as always, make sure you call us with any questions that you do have. We like to keep you well informed. We appreciate your business, and we always appreciate your referrals. Have a safe and profitable day.